Welcome to another episode of Ring the Bell with the Masters of Marketocracy. Tonight, Glenn Brownworth, one of our best performing masters, joins me, Tony Mitchell, to discuss the markets and how you might want to think about investing right now. Hey, Glenn, how you doing?
Okay, how are you doing tonight, Tony?
Good, good. Hey, the Fed held rates steady this week, but signaled they're probably going to raise 1 to 2 more times this year, with only small cuts in 2024. The markets reacted negatively. The bonds rates rose. How are you feeling about buying stocks right now, Glenn? Are you personally in a buy, hold, or sell mode?
Wow. This year's been pretty wild. A part of me wants to say I'm in a buy mode, but I'd probably be in a more of a hold mode right now. Are we like, although the selling this week might be what we're looking for right before I kind of think there'll be an end of the year kind of uptick, probably after Thanksgiving, but I think we're kind of like, it's the September into October kind of sell off a little bit. So people are taking profits, I think, before the end of the year. At least that's kind of the way I see it right now.
I'm with you. I think that selling is getting a little overdone, and I think with holding any black swans that pop up the rest of the year, I think the market can move higher the rest of the year. In fact, I'm selectively buying. There's certain things I may be selling, but I bought some Macy's today. I think it's way overdone. Paying a great 6% dividend, selling at less than 5 times PE. So I picked up some Macy's, and I'm looking at selectively for certain things. So Glenn, do you think that we still have an opportunity for a soft landing, or do you think there's a recession on the horizon?
Honestly, I think 2022 was the recession. I really think that's when the unemployment was up higher and inflation was up higher. Right now, inflation's down low, unemployment's down, and there's 11 million unfilled jobs in the United States, and we're reindustrializing. The next 5 to 7 years could really see a different kind of United States kind of show up that we haven't seen in 30 years, you know?
Definitely a lot of change on the horizon.
Yeah.
And I tend to think too that recessions are really actually, you can see them better in the rearview mirror than you can looking forward. But I really think that unless the Fed gets crazy with raising rates even further, that we can be okay with a soft landing. And that's part of my thesis for believing that the markets can move up the rest of the year here.
Yeah.
So today, Cisco announced the acquisition of Splunk. And typical in most acquisitions, Splunk was up about 20% and Cisco was down 4 or 5%. Do you hold either, Glenn?
I used to hold Cisco a long time ago in the modeling portfolio, but they kind of hit their, what would you call it? Their kind of corporate peak. You know, their glory days of the late 90s were kind of behind them a little bit, but I think they needed something to kind of get them back into the enterprise environment. But if any company can do it, Cisco has an entire division devoted to mergers and acquisition. They would come in and they would actually set up your IT infrastructure connected to them. But what Cisco wanted to do is they didn't want to destroy the company they were buying. So they were very careful on how they kind of set it up, because most mergers and acquisitions do not go well. You know, it's oil and water.
Yeah. Cisco definitely has experience in doing a lot. This is their largest.
Yeah.
But I think it's a good merger. I think there's going to be a lot of synergies out of it. Splunk is a good company. Cisco's a good company. I actually do hold Cisco. I've actually been holding Cisco kind of as a defensive play. I think that they, with all the security issues, that they had some opportunities. I didn't expect great growth out of them. But maybe we'll see a little bit better growth with this merger after this deal gets done. So I'm kind of happy. Obviously, I wish Cisco went up with it too, but it's typical that the acquirer goes down and the acquiree goes up. So wish I held some Splunk too, because it would have been a nice 20% premium today. But
yeah.
So Glenn, on our last call, well, actually the 2 calls ago, because I had to miss our last podcast here, but Gordon 2 months ago made a great call to buy Zoom. which was brilliant as it rallied right after. I, in that same call, warned of the auto strikes looming and warned about the big three, and all three of them fell after that call. They have come back a little bit. It seems like once we got to the actual strike, there was a little relief, and they've come back up. But the auto strike's in progress right now, and there's targeted strikes against all three of the big three. And even though they've rallied a little bit, the UAW is warning of additional strikes if significant progress isn't made by tomorrow. How do you feel about the strike affecting the overall market?
Well, I think everybody who wanted to buy a car in the past 24 months, for the most part, bought a car, and now everybody's kind of like at the tail end of that huge kind of bell curve. I think people are still buying cars, but I don't think that's going to affect them as much. I think it's just a play because of inflation, and prices have gone up for everything else. So the auto workers are just, I'm sure the car companies have made some money in the past 24 months. They couldn't keep cars in stock, so I think now they figure, well, they got the cash, they're going to get them to change their contracts.
Well, UPS just won a big contract well, the company lost a big contract, but the Teamsters won some big gains in their contract negotiations. And I think Sean Fain at the UAW is expecting to make a mark and make his name known through these negotiations. So I expect this to go on for a little bit. On the other hand, the writers' strike looks like there's news today that it might be coming to an end because time has passed and they realize they need to get back to work. And they're coming back to the table doing some work. I'm a little concerned that the markets could get hit by the impact of these strikes if they're ongoing for a while. There's a lot of income that's going to be lost by the auto workers. The auto companies, they have about 60 days of inventory now, but that won't last very long. I mean, 60 days, and there's still people, even though a lot of people maybe have bought recently, I think there's a lot of people that were waiting or shopping. And certainly right now, if they're not making cars, it's not going to be a good time to buy. I think if the strike continues, the stocks will continue to pull back a little bit again. It's interesting, though, UPS was kind of rallying through the strike, I think in hopes of an agreement, but the agreement came out and it was worse than everybody thought. So then UPS fell after the agreement was announced. So it's going to be interesting what happens here with the auto strikes. Unfortunately, we don't have Gordon on tonight. I wanted to ask him where he thought Zoom was going to go from now, but that was a brilliant call on his part 2 months ago when he said that Zoom was primed, and it saw a really nice pop right after that. One of the other things going on right now, Glenn, is the debt ceiling debate is back. That's the big issue in Washington again. It seemed like it was put to bed, but they're fighting over what's going to be in, what's going to be out of the debt ceiling again. Is it a concern to you?
Oh, man. I think this is just a lot of political BS because all of it comes down to it's just ones and zeros, and we basically put everything off until the future. I think we just finished paying off the Spanish-American War. So it's just political wrangling, but they threatened our country. And the last time they did this, they damaged our credit rating. We went from a AAA credit rating to an AA, a AAA or AAA minus, something like that. They actually knocked off one of the A's. And
right. Well, even recently, even after they came to an agreement, the credit rating was reduced by one of the agencies. So that's always a threat, not good.
They're playing chicken with the wrong thing. That's so dangerous that for 240 years we've paid our bills, and I think that when they're messing around with this, they really don't understand it. They're not financial people, they're not economic people, they're using it as some sort of ping pong ball, but it's really affecting things that are very dangerous. And I think they're playing with fire. They're playing with fire.
Yeah, and this is something that could be one of those black swans I mentioned earlier. Nobody's talking a whole lot about it right now, but if it doesn't get resolved, this could be a problem. The UAW strikes, I just read today too, where Budweiser and the Teamsters are starting negotiations there. And again, the Teamsters were the where the UAW, I'm sorry, the Teamsters were the ones negotiating with UPS. So they're looking now for record contracts for their members with Budweiser. And that, of course, nobody's drinking Budweiser anymore, right? So they have two problems.
Yeah.
They have two problems. Yeah. So I'm concerned. Yeah, hopefully it'll get resolved, but it's probably going to rear its ugly head again. So Glenn, what stock are you watching right now to buy or sell, and why?
I guess I'm more on the optimist side, and I've been thinking about this over the question. Actually, I'm thinking of it's called Intracellular Therapeutics, and they do cancer treatments, and they actually were down 3% today, but they're not bad. It's $52 a share. They have a decent B rating, and compared to all the other biotech companies that have been getting hammered in the last 12, I think the pandemic was like a rising tide that lifted all the biotech companies. And once the pandemic kind of started fading, all those biotech companies went down with the wave too. I can see that with a lot of the little teeny tiny companies I was trying to play around with. But yeah, it's ITCI. They've
You
done
know,
pretty.
ITCI. Well, you've made some great picks, Glenn, so we'll have to take a look at that. But you brought up an interesting point because actually one of the ones that I think there's opportunity in is Moderna. Talking about coming up with the COVID and then falling back down. That's exactly what Moderna did. But Moderna has a lot in the pipeline, and they are going to use that gene technology for some other things that may turn out to be really big new therapies. So I like Moderna for the longer term. I mentioned earlier, I bought some Macy's today, which it's kind of unusual in this environment maybe, but I think it's a time to get in. And actually, even with the market down today, Macy's was moving up. I'm not sure exactly where they finished, but paying, like I said, a great dividend, trading at a low PE. They've shored up their balance sheet over the past few years, so I think it was a great opportunity. And the other thing I did today was I bought some puts on Bud because I think we'll see that pullback just like the auto companies did with this looming strike and negotiations. So that's where I'm at. Glenn, any last thoughts for our listeners?
Do you think you wouldn't have thought that with all the chaos working at Anheuser-Busch that a lot of that pricing would have been worked in already? Like
there is a lot. It started to see some movement back up, but now we're dealing with the Teamsters negotiations. So, and I don't know that their business is coming back anytime soon. So I think that they're in a little bit of trouble.
All right.
Yep. Well, Glenn, and thank you for joining us tonight. We'll be back next month, and I believe we may have a special guest with us next month and a few more masters joining us. But as always, if you want more information on any of the masters, please visit marketocracymasters.com. Thank you, and we'll talk to you all soon.
Thank you.